Hi, Jamie. How are you?
What's going on? I think I caught the very end of your Broadway performance.
Oh, well, people were asking me what I thought Draghi would say, Jamie.
Oh, yeah, that sounds about
Uh,
right.
I make the euro go down and buy more pizza.
That's right.
Happy New
That's
Year,
right.
Jamie.
Happy New Year, Dale. How you doing, man?
I'm doing good, buddy. It's been a long time. How have you been?
Not bad. Not bad. Lots of stuff going on in my life. I got my son is 18 months old, and
Wow.
uh, yeah, my wife and I we moved from New York City to St. Louis, Missouri, where we're originally from. And
Okay.
yeah, and I still travel to New York a lot, like every other week. But I was actually supposed to travel to New York. I'm supposed to be there now. I was supposed to go there yesterday, and obviously I got an
Oh,
email Saturday.
yes.
My flight was, I mean, every flight was canceled. So it was like they're like,
Yeah.
it wasn't even like delayed. It was like your flight is canceled. If you want to get a refund, like call this number by today, by the 25th. I'm like, well, of course I want a refund, but yeah.
So you went
So,
back to your roots where your family and
uh-huh, yeah.
family there? Yeah.
Families here, parents, sisters, her brothers, you know, all that good stuff. Good Midwestern
Yeah.
town. So,
Yeah. I thought you knew the golden rule. We were taught that in the Midwest. So, Jamie, I'm interested in your impressions, Jamie, first of all, for the worst start in stock market history. And
yeah.
if you think this is a sea change, as an E waiver, there's some
Well,
people
let, let
saying it's
me let me let me move. How do I show my? Is my sheet? Can you see my screen right now?
you go up to the left hand corner and you'll see a green box with an arrow,
Okay.
and you click that,
Okay. All right.
and then it'll show your desktop, and then you click start. And then there's been some chatter in the room that you were real negative the pound above 150 and you've turned neutral. Last
Yeah.
week, I think I saw that tweet. You were looking at monthly support too. So we've got your screen up. So
Okay. So
go ahead.
here's what I'm gonna do. Let's start with the excuse me. Let's start with the S&P 500. We'll go. All right. So this is a long-term. This is a weekly chart.
Okay, I'm looking at a box of 60-minute charts right now.
Oh,
You
you
got the
are?
CAT
Let's see.
60-minute, yen 60-minute, pound
Okay.
60-minute, no
I guess
S&P.
I guess it just okay. I guess it just does that. Hold
Well, you
on.
could choose. You could change your, whatever you're showing here to the S&P.
Okay.
So we went to Hangout since we made a transition since you and I were
Right.
both together. Okay. Wow.
Okay. So you see
Cross.
this, right?
Yeah.
All right. Hold on.
This
Okay.
is the
So
most important test of a market level in years, the
yeah.
1800 level. Okay.
Yeah. Yeah. Exactly. So what we've got here is looking at you've got this Andrews line, pitchfork, whatever, whatever you want to call it. And this is connecting that this is the S&P connecting the 2002. It's actually even cleaner on the Dow, but collecting the 2002 low, the high in 2007, and then of course the low in 2009. And I've had this on here for a really long time. And what was interesting was that when we were in August, when we were coming into this level in August, um,
Yeah.
I kind of just put a parallel of this, the same slope on it, and looked and kind of went back, extended it all the way to the left, and interestingly, it crossed just a ton of major important levels going back, not just in recent times, but like going back like 20 years, you know. I mean, you can see kind of the tech bubble and the 96, that huge move higher, really
Right.
materialized after we broke through this same level, right?
Right.
It was even support back here in 1997. It was kind of resistance on the way up. It had a support here after 9/11 in 2001. The credit crisis, the global financial crisis, you had support on the first downturn in August of 2007. Similar instances, right? August 2007, August 2015. You did have a break of that level interestingly, in January of 2008. Here we are in January of 2016. And then you had a wild period of kind of, corrective behavior, if you will, that commenced in the 2008 May top, and then of course it was straight down from there. So, for me, I'm trying to keep it as simple as possible, and saying, basically, kind of world over below here, and hanging on by a thread above here. I do think that it's a much bigger change in market behavior. I mean, if you look back, the levels of bullishness on kind of longer term, sentiment, and how long it's remained at these levels. The turn down, I don't think it is resolved by simply, a couple of months lower. Now, let's move on to another S&P chart, because
when I interviewed Martin Armstrong a few months ago, and I thought we could wash out under that 1830 low, he actually didn't think we would, and actually is pretty sanguine equities. And I just did a reassessment. I've been bearish U.S. dollar yen, but the way both the S&Ps cleaned out the stops last week, Jamie, under 1830 in the S&Ps and under 116 in the yen, I could actually make a case for the yen, this being important at 116, and that we have a chance to rally to 131, 132. And there are some E-waivers that say we're not done yet, and we could go up to 2200. And when you showed that first chart, it looked like there was a return line up there. So everyone's expecting a breakdown now, aren't they?
Well, that's what I'm saying, but I don't. I put out a piece on Friday with the Nikkei, which is extraordinarily clean. I actually think that we end up. I'm not saying we're breaking down tomorrow or even next month or 2 months after that. I do think that you could be in a pretty volatile period that lasts a couple months, and maybe trade around here for a little bit. I mean, this is a range. Here we are. This is the Ebola low back here in April of 2010. The level to watch, in my opinion, I think, is probably first level trading wise would be this red line here, which you can see is kind of former support.
Yeah, 1990.
So right. So I mean, it's all
1950.
Yeah, it's the 1950s, exactly. And that actually lines up pretty well with the horizontal level over here. You've got former lows from December of 2014. So, depending on when or if you get to this level, I'd be looking for a response there, if you will. And, that's kind of when it's all a process, right? So if you traded volatile, between, where we were, recovered into last week above 19, down into 1850 or whatever, and end up popping up into 1960 or 1950, former support, if this ends up, which is on a downslope, which is important, if that ends up becoming resistance, then you kind of things can turn ugly. I'm not going to pretend to know, have an idea where I know the market's going, because I just don't. But these are the things that I'm watching for.
Is there? I know you do E-waves, Jamie. Is there any kind of wave count? I saw a wave count that this bounce is a 4, which opens the door for another push down, and some E-waivers are saying that maybe we completed something down there, a big ABC, and now we're on our way up.
Yeah,
Um,
I don't have a very clean
yeah,
wave count here. I mean, like if you look at, for example, if I make this like a 4 hour chart or something, I mean, okay, so this to me is this decline off the top.
yeah,
I mean,
impulsive.
you could count it a number of ways. I mean, this is a three, you could say it's a one, A, B, C, same thing here. I mean, it's just everything's just really ugly. So,
Right,
I don't have, it's not clear to me, and I don't like to force a wave count or whatever. I like to just kind of, if it's there, it's there. If it's not, it's not. Um,
right.
and so I'll pay attention to the market levels. But I mean, look, we've made our first big move under a support. You know,
Right.
I think so I mean that to me is a bearish sign. But yeah, in the interim, trading wise, yeah, I think that you can get plenty of sideways movement. I don't think it's going to be a V bottom because that's what we've had basically the last number of times that we've traded down to levels like this. And
Right.
um, what's the something that I've actually come to kind of pay attention to, the idea of the rule of four, of Gann's rule of four. Um, and my colleague Christian Kerr had kind of pointed me to that, and that basically says when you test a market for the fourth time, it tests a level for the fourth time, it's unlikely it's going to hold. So
Okay.
if we look at this kind of since Ebola scare, if you will, back here above 18, if you will, first test, second, third. This is the fourth one. I think it eventually gives way. Um,
Okay.
Now, I want to bring in an analog with. Can you see this other chart now?
Yes.
Okay, so a lot of people obviously are comparing current price action. You've seen it in the news. You've seen it in different places. But people talk about 2008, and that's just recency bias, right? Everyone talking about what
Yeah.
kind of just happened last time. So I mean, it's unlikely that you're going to have something like that. I was actually at least a direct repeat of history doesn't seem all that likely, especially because it's being talked about. But when I looked at the comparison of price action between now and the S&P 500, and actually going back and looking at the two top prior, the one in 2000. Okay, the rally into that top was extremely choppy and slow, and kind of started rolling over, much like we are doing here recently. So what I've done is I've overlaid the 2000 price action with current price action. We've been following this now for about 3 weeks, and it's worked out pretty well. We had
So
been
that's a 2000. You're using the fractal from the dot-com bust.
yes.
Okay.
And what we're doing is the way I look at these things is I like to what I call kind of like a maximum point of energy, and like to overlay those. And so, obviously 8/24/2015 kind of China crash, one was kind of maximum energy on the downside here recently. You can look at April 18th, 2000 as a similar event, and when you move forward from that point in time, you actually have a pretty close relationship. Really, just the turns are a couple days apart at tops. You can see here at the recent low, we were looking for a low on actually, I guess it was the 15th of January. We did not. We had some sort of a low like the day before that, but the low so far ended up being, obviously, as we know, last week on the 20th. Okay, so what this is telling me is basically to kind of maintain, just even keel, not a whole lot, and maybe look for melt up or, sideways to higher trading until about February 1st, 2nd, or 3rd. And if you do that, you'd be basically on the same level I was talking about before, which is pretty close to 1950.
Okay.
So,
Interesting analog.
yeah, and look, I mean, these things obviously they will eventually break and they're not going to work. But as long as this is working, I'm going to follow it. And from here, again, that says, sideways to up, up, maybe into 1950, and then that's when you run into trouble again. But if you look at this, you can kind of see that it would really suggest, excuse me, that from here, where we are here, until roughly early to mid-April, it's actually more or less sideways, but maybe with kind of a downside bias. There's nothing spectacular here, okay? This period here would put us kind of in May, which I guess could make sense because the whole sell in May thing, right? Go away.
Yeah.
So things wouldn't really get.
I've heard a lot of cycle guys, even from late last year or in the fall, pointing towards the April time frame as being important in a lot of different markets.
Well,
so,
if this were to fall,
equinox comes in there, you're talking GAN, so the equinox is, end of March.
Yeah.
So that kind of plays into it too, doesn't it?
Well, this is early. This would be early April right here.
Yeah. Okay.
So
I mean, you're like the 10th guy talking about early April, using a completely different method. Some of it was planetary. So interesting. I've been hearing April from all different types of disciplines. So it's going to be a key area to have your war chest ready to go in April.
Absolutely, absolutely. Have cash on hand to make a play.
Yeah.
Okay. Here's an analog that we've been following for just months and months and months and months. This is Euro.
Right.
Comparison with the decline, the drastic decline that we had back in the late 90s. Really the Euro really is a being traded really didn't come into being up until kind of like right here. It's like 98. So this price action here would be more kind of the synthetic rate. It's a lot of Deutsche Mark probably.
Yeah, right. Yeah.
But what we're following here is an analog. You can see again the maximum energy point that we had back here in March of 2015, and lining that up, and pretty good map, if you will, as far as the turns are concerned. At times, I was wondering if this was completely done, but after we started trading the way we have really since December, and this really slow grinding type of environment, that was what was expected based on this, and that puts us kind of back on track with this slight downward grinding sideways type of trade. And it does
until April.
Interestingly, yes, this right here, here you go, right here.
Yeah, April.
Early April, right here. Yeah. And so you can envision us going sideways until early April. And then the way the market dynamics are, this would fit very well with, again, if you grind sideways in the stock market, have some sort of a top in April, and then kind of fall off the cliff, and everyone gets freaked out again. That's going to cause funding currencies, particularly Euro, which at times has actually moved more so than the yen during some of these periods. You think August, the Euro actually moved a little bit more than the yen, and we could get a rip higher in Euro. Then that would put us up in the mid 120s.
Maybe that's going to say something about Fed policy too.
Yeah, I mean, we'll see. I did FX. I did an interview with FX Week not long ago, a couple weeks ago, and I do think that the risk to the dollar, and it's pretty easy to envision this. You have some, I guess I'll say I'll be PG, but let's just say some moron from the Fed come out and they say, oh, it's a mistake to raise rates, and we're going to have to consider this and that, and blah blah blah, and that the dollar all of a sudden gets smacked. I mean, is it that hard to imagine that? I don't think so. So that's out there, but I don't think it's like a thing that's going to happen real soon. Again, based on the analogs, which now we kind of have two of them, which fit pretty well, as well as the seasonal components with all this stuff. That's another thing. But check this out. This is great too. All this stuff seems to be lining up. Here are the seasonal components. This is the S&P 500 seasonality, kind of sideways to up into April, and then it turns lower. Okay. Euro dollar, sideways to up into the end of April, and then euro tends to turn down. You get big seasonal tops kind of in April for euro. Okay. So this stuff all seems to be kind of telling a nice little story technically with euro and
really the tail wagging the dog based upon what's happening in the junk bond market. Jamie, has been oil, and we've had a little bounce in oil, and oil seems to be the linchpin to a lot of what's going on in the markets. You have a view on it?
On oil?
Yeah.
Yeah. Let's see.
And it's probably something lining up in April.
Maybe.
April Fools, Jamie. There will be many April Fools this year, it looks like.
Oh, always. Let's see here. Crude oil.
So, you got people talking $10 crude now, $17 crude now. I actually think that we could rally back to, we get back through 34, we could rally to 40 and maybe even 50.
Yeah, it's funny. So here's the, by the way, have you seen the Economist cover from this weekend?
No, is it showing oil companies going broke?
Here it is. Here.
Yeah, we got to be close.
Yeah.
They have a T-Rex. They have a T-Rex on the top of the oil drill.
Yeah. So here's a weekly chart of crude, and it's always tricky when you're doing long-term commodity charts because there's different ways to obviously to look at these. You got like continuous contracts; they're calculated differently.
Right.
The expirations are all strange. I mean, it's just it's difficult. So what we have on this chart, which is looking at, this is just basically plotting the front month each time. Okay. Yeah. Like, so if you look at a commodities chart, a continuous commodities chart on some crude oil, some software will have like the high back in 2008 is like $201.
Okay, yeah.
But we know that wasn't the case. It was like 147 in the front month at that point. So that's what we're looking at. And the two equal legs, right? I love measured moves and all that stuff. They show up a lot. You do have a measured move actually from the high back here in May of 2015. This is two equal legs. Now that's in terms of arithmetic of price. They're both like the same dollar move.
Yeah.
Obviously, when we're looking from the high back here in 2008, you can't do a dollar move because $147 down to $33. Yeah, it would say that equal legs would be something like negative 76 cents or something.
Yeah, so we would go to the gas station and they would pay us to put gas in our car.
Right. So what I'm doing is going on percentage, right? So for percentage, we've got 77.5% decline, and then 76% decline right here. They would be exactly equal at $25 and like 80 something cents.
Yeah. Okay? So we only missed it by $1 or so last week.
Right. Now that's interesting because you do have right down here. See this line? This is a slope. This is the same line that connects the highs back here in May.
That's a 20, right?
That line ended up having some significance, or the slope of that line, I should say, the parallel extended from this level down here, ended up providing resistance back here in May. We obviously know what happened from there, went straight down. And then when you take the same parallel and you extend it back off the low in 2009, which is your next natural level to go to, it goes back in time and it goes through the high from 2003. So here we are, 2003, 2009, a little over 6 years later, 2016, and that we have the same level down here. It's about $25.
25. It looks like 20, but it's 25. Huh? Okay.
Yeah. It's 25. You can see right here
All right.
if I zoom in, you can see that line is it's like 2465, okay? So, but yeah.
So we either did make a low or there's possibly another one more push down. Uh, what kind of recoveries? I mean, we probably won't have the kind of recovery we had in 2009, but what kind of
Yeah.
recovery could you look for after we get a low, whether it's in now or there's one more push down?
Well, let me see here. I've got a shorter term chart to take a look at. Hold on. Okay, here we go.
You're getting complimented a lot in the room right now, Jamie. Beautiful work. People are
Oh, well,
appreciating it.
thanks.
Jamie's a mad scientist.
Okay, so here we go. This is now we're looking at front month crude. This is March.
Yeah.
And okay, what we're doing here, same idea that I just did on that really long-term chart.
Right.
This is a 4-hour chart, okay, but we're going back. This goes all the way back. So we're going connecting the line, just trend line from the May high and the June high of last year. Okay, we're taking parallels there, and we're going off of prior lows, and you can see that they are kind of spot on as far as this is the right slope to look at. Now, if you scroll in, you can see that level was support. We then broke it, so that's old support. Again, just like the S&P 500. Don't know where the market's headed, but I do know what levels to watch for to indicate important behavior changes, and that would be this same
35.
line, which it's about 35, which is interesting because the 618 of the latest swing down, okay, from January of 2016, or this, you could basically say this year's range, the 61.8 is 34.85. That's right in line with that level. So if we get up there, I would expect that to be resistance.
Okay.
You know, and
one thing I noticed, call me a dinosaur, but that line that you're pointing to is a return line of a falling wedge that, in my view, was a throwover, a huge throwover. But if we got back inside of it, above it, the falling wedge is active again, and we could probably rally back towards that 40 level. You see that falling wedge?
Yeah.
Yeah, there's the look. There's the wedge. Yeah.
Well, that would be the next area. Is the 40 region, which is the next kind of trend line, right?
Yeah.
So yeah, big area. If crude has turned the corner after last week's move higher, and I mean turn the corner even for just another move back to 35, then I would expect to see support again, probably somewhere along this blue line. You've got former congestion areas down here, a high volume level rate. High volume level here is at 29.75. 29.35 is a low from the 17th. Those are the kind of the areas I'm watching or would be interested to trade. Would be about 29.75, 29.35, and then 34.85. So that's kind of the areas for me. Kind of put alerts there.
Interesting.
Now let's look at, because on crude, obviously, in FX, we'll look at dollar CAD, we'll look at dollar NOK as well. The relationship's been a lot tighter recently with dollar CAD, of course, as they last week were absolutely, kind of lockstep, right? But as with, a lot of markets, dollar NOK has been a little different. Hasn't really been the case. It's actually been very quiet lately. But this is an interesting kind of pattern. You talk about wedges. You've got a rising wedge here in dollar NOK, and this goes all the way back to May. Okay, so
while crude was declining, this was advancing.
Right, and NOK is, it's one of the bigger petrocurrencies, along with CAD, of course.
Right.
So this is something to watch. This could be a very stealth play on a crude oil recovery at some point. I have no trade here at the moment. I don't really have a plan to trade it at the moment either, but I'm watching it closely to see if something does form. In other words, you come down, you break this, and you trigger kind of, the wedge break. You continue higher, maybe into the top of the wedge, a throw over at some point. I don't know. There's lots of possibilities here, but this is a wedge. It's contracting. So the possibility is of a big reversal over the next couple of weeks, months, whatever, it's certainly there. And this is something
I just kind of equate the extreme bearishness that we have in crude now to the same type of bearishness we had in the euro before the Draghi low a few months ago. Because no one talked about where the euro could rally back to. It was only how far it could fall. And you're getting the same thing in crude. You know, the bottom's 25, it's 20, it's 17, it's 10. It feels like sentiment is just as extreme in crude as it was in the euro down there.
Yeah.
To me.
Yeah. Well, yeah, no, it is. We actually had if I can find what it is I'm looking for here. What was that on December? Or sorry, yeah, it was early December. Okay, we put out a special report on, this is the SB Trade Desk, right? So this is the premium service.
Right. I was gonna. I'm glad you're showing it.
Well, you talked about the euro thing,
Yeah.
and at the time this was November 27th, which was a Friday. So this was published 3 trading days before Draghi.
Yeah.
Right. Okay. So we had huge bullish potential. Did a video on it, as well as published these results from the software that is, we are partners, IDOsearch, and they're, the algorithmic, kind of pattern matching software that they've developed. And so we had super bullish scans across the board for euro. This was euro yen, and what this was telling you is that we had 33 similar instances of the pattern, 3-month pattern leading up to that time, and the upside was at 3.4 times upside. Average rally over the next month was 4%. Average decline 1.2%. This was euro Aussie. 17 matches, 76% positive count, a 3.1% upside, negative 0.2% downside based on the algorithm. Euro pound was
it was a great risk reward setup there.
Yeah. So we had a lot. We did have these. We were very bullish going into that situation with the euro, and it's, you don't get setups like that a whole bunch. Maybe a couple times a year. Where you might see something like that where it's that skewed to one side, where sentiment pattern, all that stuff all lines up, right, for a big explosion one way or the other. Yeah, that was pretty fun. At this time right now, don't have anything necessarily like that, but one of the trades that currently in right now is actually dollar Swiss. And I'm on the long side, and let's see if I can find this. So here we go.
So do you think if you're long Swiss that the euro could pull back towards major support again? 106, 105?
I think 106.35.
Okay.
106.35 would be 2 equal legs from the December high. So this is a dollar Swiss chart, and each bar is 1 year.
Wow.
Yeah.
Macro.
Yeah. So this is like one of my favorite things. Is at the end of each year I go through like yearly charts. Okay. Sounds kind of crazy, but whatever. I go through yearly charts, and
you're kind of like the Carl Sagan of trading.
Well, what's great about this, that's very nice of you to say, but that guy, yeah, he was pretty awesome, huh?
He was pretty macro, yeah.
Yeah. But what we've got here, you can do technical analysis, technical principles hold on any time frame. On any time frame, that's right, exactly. I mean, as you know, you can go from a tick chart if you want to apply technical principles to that. You can go to a yearly chart or whatever, a quarterly chart, monthly chart. This is a yearly chart. Okay, you look at this chart. What sticks out? Well, you've got 2 giant candles with, and I get it. These were both SNB interventions, okay? But you know
Right.
what? The technicals don't discriminate with what made the price do what it did, okay?
That's a
In fact,
pro.
in
Yeah.
fact, that is actually part of what makes technicals so great is that you don't have, the chart and the way it moves it doesn't matter what made it happen. It still happened. It's part of the market. And you can say that all this stuff here is telling you that there's a massive decline in Swiss francs, a big rally in dollar Swiss that's being, engineered, okay, by whatever parties are involved. I don't know, but S&B, I guess. I mean, look, they want a weaker Swiss. They have negative rates. But you can look
Well,
at that.
I watched the Return of the X-Files last night, so we don't know what the force is behind everything.
Yeah, but I mean, this is quite clearly some very long-term bullish,
Yeah.
price action, if you will. And you've got, this is a log chart. Obviously, look at a log chart because we're looking at, if you look at an arithmetic chart, it's going to be quite different. And this was something that actually Edwards and McGee said in their writings was
Oh my
if
God.
you look at a long-term chart,
Yeah.
like a very long-term chart like this, and you look at arithmetic prices, pretty much anything is going to look like a wedge, right? Because as you
Okay.
go further into time and you go lower, the price percentage changes. It's going to make the chart look like a wedge. But if you look at it in log chart, that's when you actually know if there's something like a wedge going on. And basically, you could say that the decline price action basically since 1985 composes a wedge because you've got two contracting lines. So there is the
Oh
possibility.
yeah. That implies what kind of euro? 75-cent euro?
I
If
mean,
this wedge plays out?
at some point, it's quite possible. But look, I also want to say I've said that to guys too. Euro Swiss could also go higher. You know, it's
Yeah.
not.
Two drives.
We could have just a very weak Swiss franc, is what I'm saying, kind of across the board. So, that's the trade I'm in now. Look, I don't know if the market is going to reward that immediately or not. I'm in this trade and I'm looking for it to, I'm going to kind of keep managing the trade and moving the stop as need be. But we've got short term. This is a daily chart now. I'll go to a 4-hour chart. You can see that we've been buying along these, and this is the magenta line is the year open, by the way.
All right.
And that's another thing too, is just without even looking at the chart, but knowing where the yearly opens are in the last couple of years, when they're really close together, like they are here, you know that, well, the market's been basically it's primed for a move because 2 years that open very close to each other mean by definition that you have been consolidating. Okay, so what takes place after consolidations? Well, consolidations lead to bigger moves. So here we are with these consolidations, going on now for some time in dollar Swiss, and you can see kind of stair stepping higher, and we just broke out last Friday or on Friday, and then we've consolidated here early in the week, actually come back to test former resistance, becoming support here. So I actually like this now. Again, I don't know, on that yearly chart I showed, I'm talking about this thing going up to 117, at some point this year. When that happens, is anyone's guess, but we'll continue to follow this as it's working. You could see something maybe like failure up at the highs up here, especially if Euro trades down to 106.35 and the S&P goes sideways until April. That April decline, the S&P might send a dollar shock through the market where you do get a very sharp move lower in dollar Swiss before you get the real move higher. Certainly a possibility. But at this point, I do think you're looking towards the highs that we had here in November.
Okay, and that's 103.5 or so, right?
Yeah, 103.5.
Yeah. Do you have a quick look on yen before we say goodbye? And I can tell people that
Yeah.
they should consider your service because your work is elite and top shelf. You're a top gun, Jamie, and every time you're here with us,
Appreciate it, man.
I learn from you, man.
Thank you. Okay, so this is a weekly chart of dollar yen. Um, Here, let me do this actually because I'm going to look at a dollar yen. We're going to do the same thing. We're going to look at a yearly chart on dollar yen. Dollar yen yearly chart, and then we'll go down. So here's dollar yen yearly chart. Again, log scale. Trend line from 1990 to 1998 across the high last year.
Yeah.
You can see this line here, former resistance is about 106 or something this year, 106 and change. 3 years up, okay, actually 4 years up because we finished last year up, about 20 pips or something. But the last time we had a 3-year rally was over here, and that was into a top in 1998. When you go to a weekly chart, you can see the structure that defined the entire move higher, okay, was broken, obviously, with that move here early in the year. So I would be looking for basically the underside of this line here to provide resistance. Some might call it a back test or a retest, or
around 120, 121.
Yeah, around 120 or so. 120, yeah, maybe a little. I mean, it depends when or if you get there. Obviously, if you go there this week, it looks like it's about 120.08. If you go there in the end of February, it looks like it's 120, 150. So you kind of got to just pay attention to where it is, as time moves forward. But yeah, that's where I'd be looking, and it's similar idea as far as
the S&P.
Right, is that you could see some sideways trading going on here for a little bit. 119. There's some stuff up there. 119, 16, 26.
Maybe till April.
Maybe till April. You never know. But the big takeaway here for me for dollar yen is that this is some sort of a behavior. Something obviously changed. We could see it happening last year, as with where we were topping in June at long-term trend line.
The dollar kept making new successive highs without the yen participating.
Exactly. You have kind of like that fractured market, and trade-wise, we broke this level. So this, the Anders line that defined the whole move higher is no longer in effect, but it can still come into play on the other side of the market now. So that's what I'll be watching for in dollar yen.
Why don't you show your service again and how people could get involved with
Sure.
you?
So SB Trade Desk. This is it. This is when it's Mike Boutros and I, and when you are a member, you have each.
What's the website address on this? Website address.
It's SB Trade Desk. So SB is in Saettele Boutros Trade Desk. We've got swing trades that are we've got longer term charts, and then every day I write a swing trade update, which has specific trades that are in progress, as well as exact orders, as well as watch list, as well as comments and charts and all this good stuff. Mike does shorter term stuff, so he has intraday charts. Last night, for example, he wrote setups and stuff for Aussie Kiwi, Euro Aussie, Euro Pound, Euro Kiwi, basically levels to watch, 30-minute charts and whatnot, where I'm looking more at dailies and 4-hour charts and even longer term than that.
Any trials to check it out, or you're a believer that people should just go ahead and try you out and pay?
Yeah, that's kind of how we are. If you're gonna,
I understand that.
It wants you to to be to take a risk on a trade, you probably should be willing to pay a little bit for for some analysis, education, service, what have you. And it's you can always cancel. It's not like you're locked into anything. So
right.
Yeah, so that's that. And again, we've also got IDO Search, as I mentioned. This is our platform that we have with the company idosearch.com, and this is unbelievable. They've got their pattern matching algorithms. It's two guys from University of Chicago, one of actually I've known for a long time, And they have, this is the indicators page, S&P 10-year crude oil gold. You can see here watch list. This is FX. So this tells you basically the top 3 trades for the next month are Kiwi yen long, Aussie yen long, and pound dollar long. The bottom 3 trades are the best bearish trades. Would actually be short NOK yen, short Euro CAD, and short Singapore dollar against Japanese yen.
Wow.
Yeah,
cool.
So
yeah, you know, it's not easy to, first of all, even get in to be a student at the University of Chicago, let alone be a professor there.
Yeah, it's 2 guys. One of them used to work in kind of in finance and whatnot, but it was, you know, is very mathematically inclined and it runs more the business end of it. And then the other guy was a doctor, Dr. Stephen Zhang. He was a doctor of, not like a medical doctor, but he worked for the Canadian military, he mapped the human genome, did all kinds of crazy stuff. Yeah, so he brought his pattern matching algorithms to financial markets, and that's what this is the end result of. So they do a lot of stuff with equities and hedge funds and portfolio managers, but we're kind of their entry into FX, and it's great to be able to share this and give this access to, you know, to the retail trader, you know, have them have the same tools that the big sophisticated guys have. So
Jamie, thank you so much for your time, and what a great interview, and interesting outlooks and views and pitchforks. And I really am glad that you know, that I reached out and you came back. I think that we should make a date for April. What do you think? And
I say so. I say so. Maybe we should do it for late March to make sure that we're nice and prepared.
Okay. So get a hold of me. You know, I hope that this is your best year ever in all ways, not just in the markets, but for you and your family, and more important ways than just material ways. And
oh yeah.
Thank you, my trading warrior brother, for hanging out with us and edifying our community today.
Oh, thank you, Dale. It's always a pleasure, my friend, and I'll look forward to talking with you in about I don't know, 2.5 months or something like that. Okay.
All right, partner. Good hunting,
All right.
Jamie.
All
I want to thank Jamie. Great interview. Great presentation by Jamie. Everyone enjoy that? Give me a Y if you liked it. I know I did. I wrote a lot of things down, and it is recorded, so you guys can always go back and review it again. It was packed with a lot of information. So here's my wrap up in crude oil. Even if we pull back, I still think we're going to Jamie's upward target of 34.5, 35 before it fails. The room likes the euro yen for a bit, maybe up towards that 130 level. We get a rally in euro back up towards 109. Most likely it's going to be met with resistance. And now I'm going to be paying attention to Jamie's call of 106.30 in the coming days. And Jamie has kind of a bearish view in yen, but we could rally up to 120, 121. I want to thank all you guys for your contributions today, for your great shares. Welcome to Moss. Oliver, good to see you back. Beetle. Abel. Timbo, welcome to LAR. Nice to meet you. Fab. Alien, thank you for your looks and everything today. JJ Altman, Cyric, Monkey Trader, nice to meet you. Alex, Happy, Izzy, Vedran, FX Goldie, Jax, Tozen, Ryan, Ed Z, Khalid, Ricardo, thank you for your looks today. BW, Ma, Planet, MRC, Dab, Adindo, Fidel. Thank you, everyone. Have a good day trading. And I'll see everyone tomorrow. Remember, it's a Fed week. You're welcome. Enjoy the rest of your day. Good hunting, and remember, don't just count your pips, count your blessings. I'll see everyone tomorrow.